Hello and welcome back to the Geordie Pig Investor channel, where we dive deep into the world of dividend investing to help you build a portfolio that pays you. Whether you're just starting out or looking to maximize your passive income, this channel is your go-to resource for strategies, insights, and the tools you need to grow your wealth steadily over time. Hit that subscribe button and join me as we explore how to make your money work for you one dividend at a time. In today's video, I'll be going through my entire Trading 212 portfolio and show you all the different ETFs and stocks that I own. I will always be as transparent as possible, hence why I show you all of my positions in my portfolio and how it's performed over the last month. I've had lots of requests to go through all of my buys and sells for the month, so I've decided to create a new series where I'll break down this in detail, showing you exactly what I'm buying and selling every month in my portfolio, so look out for that video. It's been a tricky month in terms of portfolio performance. As you can see from the graph, we are down 1%. On the grand scheme of things, it's very minimal and not something I'm concerned about. If you're a longer time viewer, then you'll know I actually see it as a great opportunity to buy more of the quality stocks and ETFs I own when they are down in price. So when the portfolio goes up or down in value, I see it as a win either way. And as you can see, at the start of the month, we had £39,200 in the portfolio. So with the capital added to the portfolio, it has actually still grown to now over £39,800, which is a £600 increase through the money that we have put into the portfolio. So it is still growing on a month-to-month basis, and I'm very happy to be very close to that £40,000 mark now. Overall as well, we are still up over £4,400, and my predicted annual dividend income is closing in on £1,300, which means we are one step closer to achieving the £1,800 that we want by the end of the year, which will mean we have an average of £150 of dividend income every single month in a tax-free account for the rest of my life. One reason I love being a dividend growth investor, and something that really helps my mindset, is knowing that no matter how much my portfolio is up or down in a month, my monthly dividend payments are unchanged and only growing month on month, as I'm a growth focused dividend investor. So this is something that always puts my mind at ease and helps me see the positives when the market is down. Anyways, enough of that. Let's actually have a look at the portfolio itself. So if I scroll down to the bottom here, you can see a nice feature that Trading 212 has, something called asset allocation. It displays all the stocks in your portfolio and shows how they've performed that day, alongside showing you how much each stock or ETF is worth depending on the size of it. You can see today I've actually had more greens than reds, but disappointingly a couple of my bigger ETF positions have actually been in the red. You can also see from this that my Vanguard S&P 500 ETF and my JP Morgan Global Growth and Income ETF are actually the two biggest positions in the portfolio. And it also shows, if you look down the bottom, that you can see my two smallest positions being Microsoft, and then a new position to the portfolio, which is actually Greg's. And you can quite clearly see how they are much smaller allocations in the portfolio compared to the two biggest ETF positions. I've been working really hard over the last few months to narrow my portfolio down to stocks that I'm bullish on over the long term, and ones that I'm comfortable with holding for the dividend growth, capital growth, and dividend payments. My portfolio was actually over 30 holdings just a few months ago, to now see it down at 22 holdings feels great. It's important to remember that you're not married to any stock, and even if you like or use products from a particular company, this doesn't mean you have to own it if it is underperforming or not meeting your own personal checklist. So there's sometimes I see people who are owning stocks like Apple, for example, just because of the fact that they have an iPhone. That is not a good reason to own a stock. You want to do your research on the stocks, and you should have good thesis behind them, and they should tick all the boxes. I feel I now have a great balance between stocks and ETFs that I own, and the only stock I am looking to eventually sell out of is Diageo once it hopefully recovers slightly in the portfolio. You can see that's my biggest loser right now, down over 20%, and I'm hoping to see a little bit of stock appreciation before I do eventually sell out of this position and reallocate that capital elsewhere. But apart from Diageo, I'm really happy with the remaining stocks in the portfolio, and I can see myself holding on to them for a very long time. If I am to eventually sell out of Diageo, this will leave me with 9 US stocks, 8 UK stocks, 1 European stock, and 3 ETFs, which I feel is a very manageable amount, and I love going through the latest earnings call on my stocks to keep a close eye on them. For me, as long as this number here stays below 25, I think it will be manageable over the long term. Now, if we have a little look through the portfolio itself, you can see on this screen here that the S&P 500 ETF, VUSA, is just under 20% of the portfolio. We then have the JP Global Growth in Income, which, as I showed you earlier over here, is my second biggest position, being up over 12% of the portfolio, which means my ETFs combined are around about 32% of the portfolio. And the goal with these is to just continue consistently adding to them every single week, pound cost averaging into them on a weekly basis, and hopefully get these positions up so they're around about 35 to 40% of the overall portfolio allocation. My biggest stock in the portfolio is actually Vici Properties, and it's had a great month, being up over 8%. This is actually just under 7% of the portfolio now, and I'm really happy with this REIT and believe over the long term that it is going to be a great holding for myself, not only for stock appreciation, but also for dividend payments and a good dividend growth. For me personally, I wouldn't want to have an individual stock being more than 10% of the overall portfolio, as I think that's too heavy a reliance on one company. So I'm happy right now that I have all of my stocks under that allocation. Next up, you can see Visa, Louis Vuitton and Greencoat UK Wind all have allocations above 5%. Two of them performing pretty well so far, and then unfortunately Greencoat UK Wind is performing not the best, being down close to 10%. But having said this, I really like Greencoat and think it is undervalued right now, and with the very attractive dividend yield, I am happy to continue receiving my quarterly payments from them. I then have a bulk of stocks that are an allocation between 4.5% and 2% of the portfolio, and I feel this is exactly where I want most of them to be. A few standouts for the month are BAE Systems, up over 17% this month. I had Johnson & Johnson up over 8% and Starbucks up over 14%. Hopefully I'll have some good performance in the month of March and my portfolio can cross the magical £40,000 mark. As you can see down the bottom here, as I mentioned earlier, I do have two stocks that are at the lowest allocation, and they are actually both under 2% in the portfolio. I would love to increase the Microsoft position, especially with the current dip in the price to around $400, but I'm running out of ISA allowance for the year, so I'm just hoping they can continue to drop until April. So once the new tax year hits and my ISA allowance resets, I'll be able to bolster up that position and hopefully make it one that is a bigger position in the portfolio. If I show you how it's actually performed over the last month, you can see it's down over 12%. My other stock, which is under a 2% allocation, is Greggs, and this stock was only added to the portfolio last week, so it's going to take a little bit of time to build that position up to hopefully eventually being around the 2 to 3% range in the portfolio. Again, I hope this one drops further so then I can add even more of this stock at that discounted price. Currently, out of my entire portfolio being 22 holdings, I have 6 in the red. If I'm being honest, I'm optimistic about 5 of these eventually turning good and turning into the green. Overall, I feel over the long term, I have a very well balanced portfolio that will not only see great dividend growth, but also solid capital appreciation. What do you think of my portfolio overall? Is there any stocks that you don't like the look of, or that you think I should add into my portfolio? Like I say, I've got a couple of spaces at the minute where potentially I could look to add a couple more stocks. I don't mind this number going up to 25, but for right now, I am very, very happy with my current stocks, and I don't really see a need to add any more unless you can convince me otherwise. Thanks for watching the video. If you're building a portfolio for passive income and financial freedom, don't forget to like, subscribe, and hit the bell notification so you never miss an update. Please share your thoughts in the comment section and let me know how your portfolio did over the last month and what the current value is. Until next time, keep compounding and stay patient in the market because your future self will thank you. For now, this is the Geordie Pig Investor, over and out.